A high market concentration means that a high share of the total market value of stocks comes from just a few firms.
An extreme case of this was Finland during the dot-com bubble,
when the maker of these bad boys, Nokia, represented 70% of the total market value of all listed stocks in Finland.
Now, there are various ways of defining market concentration. One of the most simplest way is to look at the share that comes from only 10 companies. Now, this is how it looks like for the US, 27% coming from the so-called Magnificent Seven. In fact, these companies are so large that if they were to be their own stock exchange, it would be the second largest in the world. Now, actually, there are more concentrated markets out there. Of the major global stock markets, market concentration is actually lower in the US compared to most markets. Historically, today's concentration in the US is high, but it's not completely unprecedented. We have seen higher levels in the 60s. Now, does this really matter? Historically, when market concentration has peaked, forward returns tends to be lower than average. This plot adds the total shareholder return for the S&P 500 in periods in rising and falling concentration. For example, the decade after the dot-com bubble, S&P 500 had just 3.6% annual total return versus a long-term average of 11.4%. Goldman Sachs, who recently lowered their long-term outlook for the S&P 500, their model is forecasting an annualized return around 3% for the next decade. So this is in stark contrast from 13% we have seen for the previous decade. And one variable that drags down this estimate is the current level of market concentration. So the intuition behind all of this is that in the same way that it is difficult for one company to maintain high levels of growth and profitability,
You got no idea what it's like to be number one.
the same holds true for an index that is concentrated in just a few stocks. So this lack of diversification coupled with stretched valuations has in the past led to lower long-term returns.
But there are plenty of reasons to not be concerned that I go through in a longer video on my channel that you should check out.